Hey everyone, welcome back to Corporate Dakota, the place where we dive deep into the fascinating world of finance and business. And let me tell you, today's filing is a real doozy. We're going to break down Hamilton Lane Incorporated's latest report and see if their numbers tell a story of success, struggle, or something in between. Stick around, because we're about to decode it all. And before we dive in, if you love getting a clear, no nonsense, look at these important corporate documents. Make sure you are subscribed to the channel. We also have a fantastic community over on Discord, linked right down below. Come join the conversation. Alright, let us get started. Hamilton Lane Incorporated, a major player in private markets investment solutions, has just dropped their quarterly report. This filing is like a financial diary showing us exactly how they performed in the last few months and what lies ahead. Looking at their balance sheet for the period ending the 31st of December 2025, Hamilton Lane reported total assets of over $2.1 billion. That is a significant increase from the previous year when it was around $1.69 billion. This growth shows the company is expanding its holdings and investments, which is generally a good sign of expanding business operations. Now let us talk about the juicy part, the money. This report shows us how much money they made and spent. For the 3 months ending the 31st of December 2025, their total revenues were about $198 million. That is up from the same period last year, which was about $168 million, showing a solid jump in income. Digging into those revenues, management and advisory fees were about $153 million for the 3 months ended the 31st of December 2025. That is a nice bump compared to the $126 million from the previous year. On the incentive fees side, which are like bonuses they earn when investments do really well, they brought in about $45 million. This is also up from around $41 million in the same period last year. Seems like their investment strategies are paying off. But all this revenue comes with costs. Their biggest expense by far is compensation and benefits. For the 3 months ending the 31st of December 2025, they spent nearly $78 million on their team. This is up from about $61 million in the same period last year, which makes sense as they grow their business and need more people. And after all the revenues and expenses, they are left with net income. For the 3 months ended the 31st of December 2025, Hamilton Lane Incorporated's net income was about $58 million. This is a good increase from around $52 million in the same period last year. The 9-month period also shows growth from $166 million to $183 million. They are definitely moving in the right direction financially. Now, they also use some special ways to look at their finances to get a clearer picture beyond just the standard numbers. Take fee-related earnings, for example. For the 3 months ended the 31st of December 2025, that number jumped to over $93 million, a big leap from roughly $66 million the previous year. This shows that the core part of their business, the fee-generating part, is getting stronger. Then there is adjusted EBITDA, which is a way to measure profitability by looking at core operations. For the 3 months ended the 31st of December 2025, this came in at over $107 million, up from about $92 million the prior year. For the 9-month period, it increased to about $304 million from $264 million. These increases signal that their profitability is on a solid upward trend. Let us take a peek at some of their investments. Their equity and income of investees, which represents their share of earnings from other companies they invest in, was about $11 million for the 3 months ended the 31st of December 2025. This is slightly down from the prior year, but still a significant contribution. For the 9-month period, it was about $40 million. A healthy increase from $25 million the previous year. This shows their investments in other companies are growing in value and generating more income. And what about those unpredictable gains and losses? Their non-operating gain net was about $2.6 million for the 3 months, ended the 31st of December 2025, a big jump from just $453,000 last year. For the 9-month period, it was around $3 million, a noticeable drop from about $11 million in the prior year. These are the kind of numbers that show how volatile some financial markets can be. Scroll Specialized Fund Performance, PEF. Scroll now, you might be wondering how their actual investment funds are doing. Looking at their specialized fund performance, they have some impressive numbers. For instance, PFEX, a fund from 2015, shows a net multiple of 1.9 and a net ERR of 14.5%. BFX from 2018 is also doing well with a net multiple of 1.5 and a net ERR of 11.6%. These funds are generating solid returns for their investors. And it is not just equity funds. Their infrastructure ops fund, Accession, even though it is a newer fund from 2024, is already showing a net ER of 26.7%. These numbers suggest that Hamilton Lane is quite skilled at picking and managing profitable investments across different areas of the market. Let us talk about their assets under management, or AME, which is basically the total value of assets they manage for clients. Their fee earning arm, the part that actually brings them money, was about $79 billion at the end of December 2025. This is up from about $72 billion at the start of the year. This growth in fee earning assets is a direct indicator of their growing client base and the trust investors place in them. Of course, no company is without its risks. Hamilton Lane mentions a few, like intense competition in their industry, which is a reality for any financial firm. They also point out that customized separate account and advisory account fee revenue is not a long-term contracted source of revenue. This means they cannot always count on that income stream for years ahead. Volatile market conditions are also a constant concern for any investment firm. They are exposed to global economic and geopolitical events, which can indeed affect their business and the value of the investments their funds make. Now let us break down what all these numbers and details really mean. Hamilton Lane Incorporated seems to be on a strong growth trajectory. Their revenues are increasing and their profitability, especially when looking at measures like fee-related earnings and adjusted EBITDA, shows a healthy business. The performance of their investment funds, particularly the newer ones and those in infrastructure, is quite impressive, suggesting good investment management. However, it is not all sunshine. The reliance on revenue streams that are not long-term contracted could pose a challenge in the future. And as with any financial institution, they are navigating a complex and sometimes unpredictable global economic landscape. Their exposure to market volatility is a significant, ever-present risk factor. In my opinion, Hamilton Lane is demonstrating solid operational performance and strategic growth. They are successfully expanding their managed assets and generating strong returns, which is positive. The key challenges will be maintaining this growth while managing the inherent risks of the financial markets and diversifying their revenue streams to ensure long-term stability. They appear to be a well-run company with a clear strategy for growth in the private markets. Alright, that is our deep dive into Hamilton Lane Incorporated's latest report. What do you think about their financial performance and future outlook? Let us know your thoughts in the comments below. If you found this analysis helpful, give it a thumbs up, subscribe for more breakdowns like this, and don't forget to join our growing community over on Discord, link in the description. Thanks for watching, and we will see you in the next one.